Welcome back. Well, it is a green screen when it comes to Asia, and the implied open for the Nifty is also a little bit in the green as we speak, so that should come up for you, or just about flat, or rather higher at this point. So let's see whether we manage to sustain those gains or not, and what takes place with the mid-cap index, which ended lower in yesterday's trading session. We have market expert Prakash Diwan joining in now to discuss a couple of stocks. Prakash, hi, welcome to the show. Well, let's kick it off with the IT space. Accenture, numbers overnight, guidance maintained. What do you think that'll do for the Nifty IT index this morning?
Good morning, Ekta. So yes, you're right. The Accenture numbers kind of bring in some sort of a hope that there is probably revival that's imminent, or at least the companies anticipate that, given the action on recruitment. It's been fairly long that they've added strength. Bench strength. And the second thing that was interesting in the Accenture numbers was the contribution from AI, which is right now just about under 3% take up, but it tells you that there's enough headroom for growth in that space. Now, if companies were to kind of start looking at building on this particular area of work, there's enough opportunity to precipitate a turnaround. So I think the market is going to read this positively. And the fact that they've maintained the targets for year-end, FY24, which of course for them is another 6 months into the next financial year, is very positive. That if you were to buy any tech stocks today in India, you are at least looking at some sort of a clear emergence of a trend beyond the bottoming out phase. So if banks have run up so much and you probably find them pricey, if the PSU stocks are a bit too high in terms of valuation, IT probably provides that sucker to kind of move into at reasonable valuation and look for some sort of a tactical up move. So I think the IT index will definitely see a lot of action today and beyond. And we've already seen a little bit of a revival in the last few trading sessions. That could probably actually gain some more momentum after these numbers.
So, I just wanted, Prakash, hi, good morning. Just take that generative AI, the talk forward, right? I mean, it's like AI this, AI that. Everyone's talking only about this. So 3 companies which have moved forward in this space recently. Yesterday, Happiest Mind told us that they've set up a business unit focused specifically for generative AI. Cyient told us that they've teamed up with Microsoft to drive innovation in this space. And then there's, of course, Tata Elxsi that has Edge AI, which is perhaps, first mover advantage in this space. So from these companies, they've already rallied quite a bit. Anything that you would still buy?
So, good morning, Sonia. So you're right. You would need to look at companies from an absolute renewed perspective, given the fact that some of them are going beyond their, traditional business streams or revenue streams of ENRD and, the other regular services around digitization. Now, if AI is something which Indian companies can start building on, like Cyient, for example. I mean, they've got the right kind of experience, the kind of client relationship which will be willing to trust them with some sort of solutions, in this space. I think we will probably see an altogether new growth trajectory. So out of all these companies, if you ask me, Cyient has been the one that, of course, it's run up quite a bit. We've spoken about this at levels which are very mouth-watering. And maybe the risk reward today looks, it's almost 3x in the last couple of years. But you will probably see a new growth engine coming to some of these companies if they can continue building on. So there's no harm in doing that. I mean, remember, Tata Elxsi was at one time below 1,000 rupees and where it is today. So companies can go into a very different growth orbit if you discover and, start leveraging on a new area. And I think AI space is something which is open for all, but very few will be able to actually go further and build at a rapid scale. So that's the advantage you need to take. So I definitely, out of these names, Cyient is still a very good buy for us. As I keep on saying, don't look at the price historically, look at the price on a futuristic basis. Say today, what is the price and what is it that it could go to? And that definitely seems to be carrying the potential to outperform the larger, indices or the broader markets.
All right, Prakash, I remember you liking Delhivery earlier from all the new age companies. This morning, there is a note that is coming from Macquarie. They have a outperformed rating with a target price of 520 odd rupees. And I remember earlier in the month, I had a conversation with the management as well. 15% growth in their e-commerce GMV. They're looking at capex as a proportion of revenues coming down, margins expanding. Do you think this is poised for an up move?
Good morning, Mangalam. Absolutely. See, look at where it's standing. It has absorbed all the damage that actually started. All the business started actually on a decline in terms of growth parameters somewhere around last year. It's exactly a year back when this whole alert on e-commerce came in saying it's not picking up as it was expected, and they still continue to expand. And their expansion was actually something which impacted the P&L in a significant way because they didn't take it on the balance sheet as much, right? And you
All right.
also have overhang of some of the larger PE exits, which through the year you've seen, it's kept a lid on sorts in terms of whatever the stock could react to positively. But today, where it is, the capacities that it has, the kind of acceptance of applications that they would have in terms of newer sectors, newer client relationships, all of that is going to start helping them. And the difference between Delhivery and the other players, the number two, number three players in the space is widened. So while the environment has been tough for everybody, some of these stronger players actually will emerge stronger once things look up. And I'm a firm believer that ONDC in India is going to be probably what UPI did, a few years back in terms of reinventing the entire value chain. And some of these companies stand tremendously to benefit from that. So wait for consumer demand to go up and e-commerce to get much more mature. And definitely delivery will probably start delivering.
All right, and perhaps wait for some of the supply to come in as well and get absorbed too. We had, reports that SoftBank is looking to sell stake on Delhivery. So that's about Delhivery, but let's...
Prakash, any thoughts here? We talk about how stocks are expensive, but who is to say that after 50% rally, they can't rally another, they can't double from there, right? I mean, we've seen it happen with so many stocks in the past. Are you still bullish on Varun Beverages despite the rally?
So after today's 20% move, it seems imminent once you open. It will price in quite a few of these salient points that even Mangalam has very rightfully brought out. This is a great acquisition for them. They get presence in a market which they don't actually have much of a play right now. But when you mentioned this 111 to 1400 journey, remember these are businesses that are unique in the listed space. So it's very difficult to kind of put value when they initially come into the reckoning. But now that people have understood the kind of growth that comes along with this presence, it's easier to attribute much more serious valuations and extended valuations to it. But I believe it's kind of priced in quite well. You would need to kind of look at buying these kind of companies only on some sort of a news flow which is negative, but may not be very permanent. So that's the way to play most of the consumption names. Buying them at expensive levels could probably make you wait longer for some sort of an alpha creation in the future.
I would tend to agree with you, Prakash, out there. At 1350, the stock would trade at around 65 times 1 year forward earnings. And even at current levels, with the up move that we've had, nearly 17, 18 times since the IPO, the stock has moved into the top 50 companies by market capitalization band. So just for perspective, Varun Beverages in the FMCG space is higher than in terms of market cap, Pidilite, Marico, Britannia as well.
Wow.
And the non-consumer companies, the market cap of Varun Beverages is now higher than names like Dr. Reddy's Ekta and Siemens and a lot of these other companies too. So yes, there are growth prospects, but just keep an eye out on that market cap, 1.5 lakh crores.
Okay, well, Prakash, just a quick question before we get to market open. The RBI tightening norms for lenders' investment in AIF units. A lot of these NBFCs could be in focus on account of that. Have you done some work on it? What are the stocks that would be in focus? And do you expect significant downside today?
So it's a continuation of RBI's efforts to tighten the belt in terms of wherever they felt there were potentially areas which could kind of enhance the systemic risk. They're trying to kind of curb that, which is so important, right? And the next phase of growth is going to be very favorable for NBFCs who on a standalone basis can raise money. So go back to the big names again. Though it's expensive, Bajaj Finance continues to hold sway. You'll have probably the Cholas and the Sundrams and the Srirams of the world, which do not get impacted by these kind of funding arrangements. So I think it's a good move for the sector, but possibly for some of the weaker names which were thriving on easy money coming through these structured deals, that could probably be a little bit of a growth issue, and they'd probably not be able to match the growth of the leaders in the sector. But if you stick around with the leaders, I don't see any issue with the NBFC space because that's definitely likely to kind of revert. In fact, some of the smaller names also which have built a franchise where they can raise money on their own strengths will do well. And one of the names that I like in this is Five Star Business Finance. You know, it's a very small company, gets into small ticket, but the kind of structure that it has in terms of its credit, appraisal systems and deployment and collection, it's remarkable. So I would be a bit picky about this, but I don't think the big ones will get impacted today.